All right, everyone, get ready for our deep dive today. We're taking a close look at multi-level marketing, MLM. Things like Avon, Herbalife, and all those essential oil brands that are everywhere online these days. You sent over some research on this, and wow, let me tell you, it's really interesting.
Yeah, MLM. It's huge. We're talking billions of dollars globally, but it works in a way that most people probably don't realize. So it's not just about selling products directly, right? The distributors also make money from people they recruit into the network. They get commissions on those sales too. It's kind of like this whole system of sellers all connected.
So like you're building a sales team, but everyone's a customer too.
Exactly. Yeah, that's a good way to think about it.
Okay, so why are we even talking about this? Well, lots of people are really drawn to MLM because they want financial freedom.
Especially women, right?
But the research shows that most of them actually lose money.
That's kind of shocking when you think about it. It is a bit of a paradox, right? You have all these people, and they're looking for financial gain, but they're joining a system where it seems like the odds are stacked against them. So this is where financial risk tolerance becomes really important. It's like, how much risk are you willing to take with your money? Some people love the gamble. They're all about those big wins, even if it means they could lose big too. And then you have others who are all about stability, playing it safe.
So it's all about knowing yourself. Right. Knowing what you're comfortable with.
Exactly. Yeah. And knowing yourself is key when we're thinking about MLM. Now, there's actually been research on risk tolerance and entrepreneurship. Turns out people who are comfortable with risk are more likely to start their own businesses, taking that leap. But here's the thing. Studies also found that those same risk-tolerant people often don't do as well financially.
Wait a minute. So you're saying if you're comfortable with risk, you're more likely to start a business, but you're less likely to make it work. That doesn't make sense.
It is a bit counterintuitive.
Right.
And what it tells us is that it's not just about how much risk you'll take. It's also about how you think about and manage that risk. Now, let's go back to MLM. If we think those risk-tolerant people are more likely to get into MLM, we'd think most people in MLM are okay with, taking those financial risks.
Yeah, that makes sense, especially since the research says most people in MLM don't actually make a profit. But you're saying that the people who usually join MLMs, well, they don't fit the profile of a big risk taker, do they?
Not always, no. Think about who participates in MLM. It's a lot of women, often from lower income backgrounds. Many of them might not have a lot of experience with sales. And those groups, well, they aren't typically known for taking huge financial risks. So it's kind of a puzzle, isn't it? You have these people who might not be big risk takers, but they're drawn to something that seems to favor those who are. So what's going on? Well, this is where we need to really dig into how people make decisions. There's this idea from behavioral economics called prospect theory, and it helps explain how we decide things, especially when we're not sure what will happen.
Ooh, prospect theory. I love a good mind-bending economic theory. Tell me more.
So prospect theory, it says that when we're figuring out if something is a gain or a loss, we don't do it in a bubble. We have a reference point. It's like a starting point that shapes how we see things.
Okay, so it's not just about the amount of money itself. It's about how we see that amount compared to where we are now.
Exactly. You got it. And our reference point, well, it's affected by all sorts of things. Our emotions, our culture, our social networks, who we hang out with, all of that.
Okay, I see where we're going with this. So how does this reference point thing play out in MLM?
Well, think about how MLM is usually presented. It's not just, hey, sell these products. It's, hey, come live your dream life. Be your own boss, have financial freedom, achieve the American dream, all that.
It's all over social media, right? You see those picture-perfect MLM success stories. Everyone's happy, living the good life.
And it's all thanks to MLM. I mean, it's tempting, right?
It is tempting, yeah. And that's where things can get distorted. When someone shifts their focus from just the money to this, like perfect future, the risks might seem smaller. Maybe even like they don't matter.
Yeah, like they're not comparing the potential losses to their bank account. It's like they're comparing it to this future them, the them that's living the dream. And with that kind of comparison, that gap, the initial investment just doesn't seem as risky.
I see. So you're so focused on that big payoff way down the line that what you have to shell out now just doesn't seem like a big deal. Like, okay, maybe I lose a little bit now, but just imagine all the money I'll be making later.
Exactly. And this is where another piece of prospect theory comes in. It's called affordable loss. The idea is that we're more likely to take risks if we think we can handle the potential loss.
So let me see if I get this. So even if I'm usually pretty careful with my money, I might be more willing to take a gamble if it feels like the stakes aren't that high.
Right. And now let's apply that to MLM. Usually, that initial investment, it's not a huge amount. Maybe it's a starter kit, a membership fee, something that feels manageable, right? Especially when you compare it to, say, starting a traditional business.
Yeah, it's like, what's $100 if it means I could make thousands, maybe even millions later?
Exactly. That's exactly the thinking. That low barrier to entry, that's what makes it seem like there's not much risk.
Hmm.
But what people often forget about are the hidden costs, the costs that come with participating in MLM, I mean.
Ah, so it's not just about the initial buy-in. What kind of hidden costs are we talking about?
Well, there's often pressure to keep buying more inventory, to go to trainings, even to travel for conferences, and all of that eats into whatever profits you might be making. Plus, there's the time commitment, the effort. You've got to recruit people, market the products, actually sell the things. It's way more than just posting on social media a couple of times a day.
It is a lot, yeah. It's easy to forget about that time investment, especially because it's always presented as this flexible work. But if you're putting in a ton of hours and not making sales, that flexibility, well, it comes at a price.
Oh, absolutely. And another interesting thing about MLM, a lot of these companies, they don't have to disclose their distributors' earnings.
Hold on, seriously. They don't have to tell people how much money they're actually making. That's wild.
Yeah, I know. It's pretty crazy. Think about it this way. Imagine you want to buy stock in a company, but you have no idea how they've done in the past. No financial records, nothing. Would you invest your money then?
No way. I'd want to see the numbers first, make sure they're actually making money, right?
Of course. But with MLM, that kind of transparency just isn't there a lot of the time. And that lack of information, it can contribute to that distorted reference point we were talking about earlier. If you don't have the real financial data, it's easier to focus on that rosy picture, that dream they're selling you during recruitment.
Yeah. They're selling you on potential, not the reality.
Yeah.
And it's hard to make a smart decision when you don't have all the facts.
Right, exactly. And we haven't even gotten into the social pressure that comes with MLM. These companies, they often do really well in communities that have strong social ties, places where trust and relationships are super important.
So it becomes about more than just the business, right?
Yeah.
It's about the connections, the community.
Exactly. And that makes it so hard to say no when a friend or a family member tries to get you involved. You don't want to hurt their feelings. You don't want to mess up that relationship.
Oh, I've totally been there. It's like, I love you, but I'm not so sure about this whole essential oil business.
It's tough, for sure. But that social pressure, that feeling like you owe it to them, it can be so strong. It can be more important than how much risk you'd normally take. And it might lead someone to join an MLM even if they have doubts.
So it's not just about the money. It's also about wanting to support people you care about, wanting to be part of something. It's like a double whammy.
Yeah, it is. And there's another layer to this, too. It's something called heuristics. Heuristics are like these mental shortcuts, little rules of thumb we use to make decisions faster.
Heuristics. Okay, remind me how those work again.
Sure. Think of them as a quick and datey way to make a judgment, without overthinking things. They're helpful sometimes, but they can also lead us in the wrong direction.
Okay, got it. So how do these heuristics play into MLM?
Well, let's say someone is explaining an MLM opportunity to you. You might use what's called the availability heuristic. It's where you decide how likely something is based on how easily you can think of examples of it.
Oh, okay. I think I see where you're going with this. So if I keep seeing those MLM success stories online, those examples are fresh in my mind. And that might make me think it's more likely to be successful, even if those stories are just a tiny, tiny part of the bigger picture.
Exactly. Those success stories, they really stand out. But the stories of people who lost money, well, you don't hear those as often. So it's like you're only seeing one side of the story.
It's like when you look at Instagram, right?
Yeah.
It seems like everyone is living this perfect life, but really they're just showing you the good parts.
That's a great analogy. And there's another heuristic that might be at play too. It's called the representativeness heuristic. This is where we judge how likely something is based on how much it looks like something we already have in our mind.
Okay, so if MLM is being presented as like a form of entrepreneurship, and I already have this idea of entrepreneurs as successful and driven people, I might think MLM is good, even if the data doesn't really back that up.
You got it. We're basically making judgments based on how well something fits into our mental categories, not on the actual evidence.
Wow, okay. So we've got this whole mix of things going on, our risk tolerance, the reference point, the idea of affordable loss, emotions, social pressure, and even these mental shortcuts, these heuristics. It's almost like a recipe for making bad financial decisions.
Yeah, it really is a lot to think about. And it shows why it's so important to be careful when you're looking at financial opportunities, especially the ones that involve networks and recruiting people. You really need to look at things with a critical eye.
For sure. So we've covered a lot of ground. We've explored what draws people to MLM, even though the research says most people don't make money from it. But where do we go from here? What does all this mean for our listener? Someone who's maybe thinking about joining an MLM or knows someone who is.
That's the big question, right? And that's exactly what we're going to talk about in the last part of our deep dive.
All right, so we've spent the last two parts of our deep dive really digging into MLM. We've looked at the research, the psychology, all of it. But let's bring it all together now. What are the big takeaways for our listeners? What should they be thinking about, especially if they're thinking about joining an MLM or know someone who is?
I think the biggest thing to remember is that the promise of easy money, that dream lifestyle, it's really appealing. But you got to look past that. You have to really understand the risks because the research is pretty clear. Most people who join MLMs, they don't make money. They actually lose money.
It's so easy to get caught up in the excitement, especially when you see all those success stories online. But those are usually the exception, not the rule.
Right. And that's where knowing yourself comes in. You have to understand your own relationship with financial risk. Like, are you truly okay with maybe losing a lot of money? Because even if the initial investment is small, those hidden costs, they can really add up.
Yeah, for sure. We talked about that. It's not just that starter kit or the membership fee. It's all the other stuff. Buying more inventory, the pressure to do that, the time you put in to build your network, all of that.
And about those networks, you have to be aware of the social pressure, that obligation you might feel to help out your friends and family. It can make it really hard to say no, even if you have doubts.
It's true. It can feel like you're letting them down or missing out on something big. But at the end of the day, you're the one who's responsible for your own finances.
Absolutely. And something else to consider is how MLM companies are structured. A lot of times, it's the people at the top who benefit the most. The more people they recruit, the more money they make.
So a few people making a lot of money often means a lot of people losing money. And that brings up some big questions, right? About how fair and sustainable this whole model really is.
It does. If an industry needs a constant flow of new recruits, many of whom will lose money, can it really last? Is it ethical? Those are important things to think about.
Definitely something to consider. Okay, so bottom line, what advice would you give someone thinking about joining an MLM?
Do your research. Go beyond the marketing and those glowing testimonials. Find the real numbers. What are distributors actually earning on average? What are the hidden costs? Talk to people who have been involved in MLM, the ones who made it work and the ones who didn't. You need to see the whole picture.
And remember, if it sounds too good to be true, it probably is. Don't let the promise of easy money make you ignore those red flags. Take your time, weigh the risks and rewards, and make a decision that works for you, for your financial goals and what you believe in.
Yeah, I think that's great advice.
Well, that wraps up our deep dive into the worlds of multi-level marketing. We've explored a lot today. The psychology behind it, the financial risks, the ethical questions. Hopefully you've learned some things that can help you make informed decisions about MLM opportunities. Thanks for joining us.